Welcome. You're listening to the Best of Investing on News Talk 910, sponsored by Pacific Trade Exchange, your best in trade. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here is our format. A few guys sitting around a bar having drinks. Did you guys bring the drinks this time?
Darn.
You forgot again? Gee, I gotta get new co-hosts here. Talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and we have Russell Rosner of the Equity Coalition. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. You got it. We're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is old TV shows.
Cool. I'm going to do good on that one.
Yeah, you'll do well on this one. Okay, our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also on television, Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. Don't forget to go to World Wraps in Corte Madera and Santa Clara, because they're going to be giving you a free smoothie if you purchase a wrapper bowl. If you mention the Best of Investing, go there for lunch today. Best wraps in town. And don't forget to mention the Best of Investing for your free smoothie. And today, what are we going to talk about, Russell? You came up with an awesome topic.
Well, to start off with, I was going to talk about basically investment advisors versus broker-dealers.
Okay.
And would you like me to go on about the rest of the
course.
show?
Yeah.
And then we're going to segue into something really fun, basically scams, how investors get scammed. And, they can be scammed in many, many different ways, but we're going to just talk about probably the top 5 or 6 scams that people encounter. But I think, few of our listeners will know about some of them, but probably not all of them.
Well, I'm still waiting for my millions from Nigeria. Is that coming?
I can't believe I still get, literally I get, half a dozen emails a day, and they're always written differently. So they've got these people somewhere locked up in some closet churning out these
Of course.
letters about.
And I'm still
$5
also
million
waiting for
bucks
my foreign lottery winnings, which I forgot to enter, but somehow I won.
Oh, that's right, in the UK.
Yeah. You know what, I got to tell you real quickly, my favorite one was when this guy called me, I called him because one of those, you get a card in the mail that says, you've definitely won one of 3 things, $1,000, a TV set, or a boat. And I'm going, and then they show a picture of the boat.
Mm-hmm.
And I'm going, okay, there's something, I know there's something wrong here, I'm going to have fun with this. So I call, and it's in Boca Raton, Florida, typical
Mm-hmm.
place, right? And so, the guy says, okay, all right, Mr. Brown, that's your name, Mr. Brown, go ahead, he's talking just like this, okay, give me the number right above your name. And so I give him the code number, whatever, and he's all, oh my gosh, he goes, Mr. Brown, you did it, you actually won the grand prize, you won the boat.
Wow!
Wow, I'm all, wow, that's fantastic. And I said, okay, what's the catch? Playing kind of innocent, right?
Mm-hmm.
And he said, well, there's no catch. It's a free boat. He goes, all you have to do is just pay for the shipping. I go, how much is the shipping? It's all $8,000, right?
Oh.
And so a little silence. No, so I decided to
If
go.
I fly over and check it out first.
Well, no, but I kind of said that. I said, oh, you know what? What a coincidence! I'm going to be in Boca Raton, Florida in about 2 months. I'll just pick it up so I don't have to pay for shipping. No, Mr. Brown, I'm sorry. You have to pay for shipping. I go, no, I don't. I'm going to pick it up for free. Click.
Did he hang up on you?
Yeah, unfortunately. So I never got my boat.
That would have been fun.
Yeah, I would have loved that.
So, the thing that they say about boats, the greatest day of your life is the day you buy your first boat, and the second greatest day of your life is when you sell your boat.
I've heard that. I've heard that about restaurants too.
Mm-hmm.
Why don't you go into a couple of your favorite schemes?
Well, before I do that, let's talk a little bit about the advisors and dealers.
Oh yes, of course.
Yeah, so I would say, I don't know what the percentage is, but most investors probably use some sort of an advisor to invest their funds, whether it be a large firm or a small individual firm. And basically you have the option to either invest with a registered investment advisor or with a broker-dealer representative. Now the difference between the two is basically that the registered investment advisor gets paid on the amount of funds that they're managing for you. So it's a percentage of assets.
Okay.
So they're actually incentivized to grow your assets because they'll get paid more money. And the other neat thing about them is that they don't charge anything else. They don't charge, well, they might charge a small quarterly fee, but not too much. Now, with a broker-dealer, they make money on commissions. And so if they sell you a mutual fund, they might make 1%, 0.5%. You never really know what they're making. But I feel that finding a good registered investment advisor is probably the way to go if you want to have somebody that's really looking after your best interests.
Okay, well, I'm going to challenge you just in a question on this.
Sure.
You hire a registered investment advisor and he sticks the money in a money market fund.
Mm-hmm.
Now, he gets paid a percentage of the assets, and he's really not doing anything.
Sure.
Or he just goes ahead and finds a no-load mutual fund and sticks all the money in that, and then just kind of sits and waits and does nothing, but gets paid.
Sure.
I mean, at some point.
So he's not responsible for your return.
Exactly, yeah, but he's
Nor
also
is he-
not being actively
Right, he's not
managing it,
motivated.
you know what I mean? But
I know.
I mean, it's kind of it's sort of a fine line, because you also don't want a situation where a guy is churning the portfolio over for whatever reason either. I mean, it really comes down to the net rate of return that you're gonna earn.
That's correct. That's
So,
correct.
You know, should you be in the market? Should you be out of the market? Should you time the market? I mean, we've had experts on the show where, I mean, you get a varying degree. Some people will charge just a flat fee.
Right.
Some people will charge, like you said, a percentage of assets. And then you get the people who, you know, will charge a commission. But in theory, they're still theoretically looking after you, unless they're just gonna do it one time and then leave, right? Because
Right.
if you do a bad job, they're gonna take their business elsewhere, and the broker wouldn't get more business from them.
Sure.
So how do you kind of view all the, I've been sort of rambling on here for a while.
The various permutations there.
Yeah,
Well,
permutation, that's a good word.
Well, to start off with, we all need to do research on anyone that we're going to give our money to. And I want to make this point very clear, too, that we should always have at least 2 to 3 different advisors working our money for us. A lot of people give all their money to one guy or one company, and that's not diversifying. Because if there is some sort of unscrupulous person you're working with, you could lose it all. So it's good to diversify over your investment advisors. But back to the question about them not being incentivized to grow your portfolio, you need to get references. You need to study up on any advisor you might be working with.
Track records.
And track records, look over their track record. And most of these guys have a very clear track record that goes back many years.
In fact, one of the questions I would ask is not so much how much did you make when the market was going up, but how did you protect me when the market was going down? Because not losing money is a major part of keeping your portfolio intact.
That's a really good question to ask. Sure. And also, how long have they been in business? If somebody has had steady returns for 20 years, basically they'll be up and down, of course. But if it's been a pretty good return, then you have that going for you. But outside of that, I don't know, Mark, do you have any ideas on the question?
Well, no, my question is, are there more broker-dealers than RIAs, registered investment advisors? What's more common?
That's a good question. I believe there are probably more broker-dealer representatives than registered investment advisors, because all of the big companies out there, Charles Schwab, Goldman Sachs, all of their representatives are broker-dealer reps.
Okay. And I remember when getting my license, back in the old days, we had heard stories about some of the larger broker-dealers where they were piling up on certain stocks, and then they thought that the stocks were going to go down, but they didn't want to dump them.
Mm-hmm.
So they would convince their reps to tell their clients, "Oh, this is the greatest stock in the world," to keep the level high, so that when they dumped the stock, they wouldn't lose a lot of money themselves.
Correct.
So they kind of were exactly opposite of what they should have been doing for the client.
Well, that kind of leads us to maybe one of the first scams, the pump and dump scam. Would you like to go over that right now?
No, tell you what, we're going to cut to a commercial break, and then we're going to have you explain what does
Pump and dump.
and dump. First you have to pump, then you have to dump. Okay. All right, we are going to cut to our first commercial break, and but before we do, we're very quick special promotion. The group War, remember Cisco Kid was a friend of mine.
I love it.
Okay, they're going to be playing at Moore's Riverboat tomorrow, the 24th at 5 p.m. This is your last chance to win free tickets. With this special trivia contest, and the first person with the correct answer is going to win 2 free tickets. And here's the question. What actress starred in the movies The Blind Side and Miss Congeniality? The first caller with the correct answer is going to win 2 free tickets to War at Moore's Riverboat. Call 888-912-1190. Make sure to include your email address and remember to speak slowly and spell out each letter. And here is our first trivia question, and remember the theme is old TV shows. Okay, we all remember the Fonz, who used to say, "Hey," right? Remember on Happy Days? But what was the Fonz' first name? The first 3 callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. We all remember the Fonz, who used to say, "Hey," on Happy Days. But what was the Fonz' first name? Again, 888-912-1190. Make sure to include your name, email address, and remember to speak slowly and spell out your information 1 letter at a time. And we will be right back. Excellent.
Awesome.
Cool.
Anyone know the answer?
Arthur.
Oh,
Very
Arthur
good.
Fonz, that's right.
Yeah.
I was thinking Anthony. I couldn't.
Arthur Fonz spread it.
That's because Mrs. Cunningham would always call him Arthur Fonz.
Arthur. Yeah.
Is that in your way, my friend?
Yeah.
Church of the Fonz.
I should have caught that.
Church of the Fonz.
That's a Family Guy episode. The Church of the
Oh,
Fonz.
it's
really.
The Church of the Fonz, really? That's funny. So, think about some of these here.
Wasn't getting too combative with you, was I?
No,
Okay.
no, that was really good. I mean, you know, I don't want people to feel like we're anti-broker dealer either.
So Pump and Dump. I don't know. I've never heard of Prime Bank. I don't know what that is.
Yeah,
I know what
I'd
that
never heard
is.
of that. I'd never
Okay.
heard of that either.
Variable annuities, that got Edward and I, before you got here, talking about how in the 80s that Dad and I had an agent that used to come in every 6 months and churn our variable annuity into the latest, greatest. Oh, and this thing's even going to make you more money over 20 years. Look, you know.
You're gonna practice how I'm
you
gonna
know,
come in
Right,
on
you know,
this.
and we would always, whatever
Right,
cash
right.
value we had built up with,
do that.
would always
Roll
like
it,
get,
rolling,
you know, go back
rolling.
down to nothing, because he would always be rolling us into the next thing.
Right.
And
Remember Animal House?
and one
John
time
Belushi?
Yeah.
calling the company and complaining when I saw.
I even
how
wore a new
I couldn't
shirt
have
just
the
for you,
time, my
Kramer.
cash
I
value
love it.
Should have been like 10
Okay,
grand.
ready?
It was all the way
Ready?
back down to like,
Oh, boy.
$1,500.
You know, this is. I think this
Wow,
is what
so
wax.
they
This is like
reinvested
waxing,
your funds
right?
without
Isn't that what
even
women do? They
Oh,
wax.
yeah.
Permission?
Well, no, we did, but.
I gotta get stickier tape.
Why don't you start a new business?
Start a new business, yes,
Every
it's
time
waxing
you
one.
roll into
Wait, hold
another-
on.
The best
from
of
one
waxing.
variable
Here we go.
annuity, this gets
Yeah.
universal
There you go,
life
see?
policy with the whole thing.
Don't put that
being,
on.
Here's what you can
Don't
pull
put
out
this
in
on.
20
Okay.
years if you do it. It was all couched as a retirement savings.
Oh.
But because of the prepayment penalties, every time you go from one to another, it would always basically reset your cash value. So even though I'd been paying in over time, every time we rolled it into some new product, there was a significant fee because the penalty from going from this one to this one always reduced it, but he would always show that because it was a better program, over 20 years, assuming you never stopped paying it, you'd actually have a bigger pie at the end. So
That
that's,
would have been nice to have shown you product Z
yeah, right.
to
Right.
begin with, rather than A to B to C to D.
Yeah.
Now that's totally a scam. I mean, you know, they were probably making money on the fees.
Well, they were.
Or on the penalties, right?
Yeah. Somebody
Yeah.
was making money on the penalties, and plus there was always a big upfront commission on every.
Well, I
job.
love when the used car salesman, right? He's talking to prospects,
Right.
And he says, "Hey, you buy this car, the wife and kids will think you're the greatest." He goes, "Wait, I'm not married." He goes, "No, my wife and kids."
Hey, can you look up Ponzi and what year he?
That was the early 1900s. I believe.
Right.
The early 1900s.
Yeah, it'd be kind of cool to get his name
Oh, yeah, yeah,
Is
yeah.
it Raphael Ponzi or?
Wait, Mark, why is
Gomer
there a picture of
Ponzi.
you coming up on this?
Wait a
I
minute.
tease him. Okay, 1910, a
Oh.
Charles Ponzi.
Charles
That's
Ponzi,
right.
that's right.
Nice looking picture.
Charles.
Chuck
Yeah.
Ponzi.
Mustache.
That's a good picture of you, Mark.
I like it.
Knock it off.
I was going to start Ponzi Financial, and I go, no, that doesn't sound very good. No, okay.
Ponzi Financial, that's gonna be the name of my next fund.
Oh, my new company's going to be called Scamco.
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 The scheme was named after Charles Ponzi, who became notorious by using the technique in 1920.
Oh, in 1920.
Yeah, Ponzi did not invent the scheme. For example, Charles Dickens' 1857 novel Little Dorrit described such a scheme, so he maybe took it from there.
Interesting.
Lucky guy, got it to be named after him.
Yeah.
I gotta come up with
It's not the
something.
guy who invents it,
notorious.
it's the guy who gets famous for it, right?
Yeah, that's not good. That's like the guy, you know, they say get Bobbitt. Remember?
Bobbitt? No, not sure.
Lorena Bobbitt.
Lorena
Yeah.
Bobbitt to get a
Yeah.
Bobbitt.
Yeah, Bobbitized. Yeah.
Yeah.
Yeah, that's not good either. Okay.
Well, how about Lewinsky? That was your last name.
Oh,
Following it around a little bit.
man.
Wait a minute, I saw that in Animal House too. Again with Animal House. Okay, you guys ready?
Yeah.
Mhm.
Well, that's right. What did they say? If Ted Kaczynski, remember him? If
Yeah.
he married Monica, it would be Monica Lewinsky Kaczynski.
Yeah.
Well, Polish people are running around there.
Watch
Okay.
Saturday Night Live.
Okay. Okay, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Russell Rosner. And when we cut to the first commercial break, before we cut to the first commercial break, we asked this trivia question for the war tickets. You guys know the answer to this? Okay, what actress starred in the movies The Blind Side and Miss Congeniality?
That was Sandra.
Yes.
Bullock.
Bullock,
That's it.
very good.
Yeah.
It's a tag
Two
team.
heads.
Two heads for that one,
Yeah.
okay. And when we went to our first commercial break, we asked this first trivia question. We all remember the Fonz, and this is old TV shows we're talking. The Fonz, who used to say, "Hey," on Happy Days, but what was the Fonz's first name? Russell, I think you can remember that.
It would be Arthur.
Arthur, very good, all right. And you were going to get into what is pump and dump. That's not what I do at the gas station, right?
No, and hopefully that's
Pump
not
the
what
gas
you
and
do
dump my money?
in public at
Yeah,
all.
yeah, that's Okay, explain what pump and
Sure,
dump
I'd be
is.
happy to. Well, pump and dump is usually done in the stock market, and it's a highly illegal practice where a small group of informed people buy a stock before they recommend it to thousands of investors, because the result is that the stock will have a quick spike in price because tons and tons of people are going to be buying it, and then it'll fall very quickly right after that. And the perpetrators who bought the stock early will sell it off before the price goes down, and they'll make a huge profit. So most pump and dump schemes recommend companies that are over-the-counter bulletin board. I don't
Or
know.
under the sink, as we would call them if they're really small.
Is that still pretty common today, Russell?
What, the OTC?
The pump and dump,
Yeah.
pump and dump schemes, because I get emails too for these things, which are like,
Oh yeah, buy it at 30 cents, it's supposed to go up
Yeah.
to $4.
Well, to a certain extent, you can do pump and dump in reverse, such as manipulating a stock's price by saying that it's going to go down.
But one thing though is, if I remember correctly, in the rules of short selling, you can't you have to short on what they call an uptick. And the reason for that is that if you could just, short selling basically is selling the stock before you own it.
Right.
And you can basically keep borrowing, that's how you do it. So if you just keep selling, what happens when you sell? Price goes down.
Right.
In theory, you could just sell, and then eventually buy at a low price. It'd be kind of almost a no-risk situation. So the NASDAQ had come up with the rule, I think it was them or NYSE or whoever, about you had to sell only as the stock had what they call an uptick.
Very interesting.
Yeah.
So, for instance, Warren Buffett could certainly manipulate the stock price of a given company.
But he wouldn't do that.
No.
well, look at what happened on Thursday. We had the stock market drop over 200 points, and the reason that the Wall Street Journal gave was because one of the investment houses that will go unnamed, but their initials are GS, basically said we're recommending that investors short the stock market. So what does the stock market do? It goes down 250 points. Well, I'm a little bit of a skeptic, and I'm thinking to myself, so, how many people who work for that firm were sitting around the night before going, okay, well, let's line up all of your orders and short orders because we're going to make an announcement tomorrow, and sure enough, the market goes down 250 points.
Now, they can't control it, but again, we were talking off break, but, they could say, well, all we were doing was just advising people, we think the market's gonna go down, and hey, look at that, we're right.
Well, I just think it's
Sure.
just a scam. I think, Wall Street, those people that work in Wall Street and at those houses, they have, an unfair advantage to be able to know or take advantage of market trends. And, the little guy, the market goes up one week, the market goes down one week. I mean, if you're fully invested in the stock market right now, this must be excruciatingly painful this year, actually the last several years.
So if it goes up and down a lot, just buy puts and calls.
So that's not really an
You
example
could,
of pump
sure.
and dump, but I just find it really interesting that,
Well, that's actually short and distort.
That's
short
true.
and distort, okay.
Yep, that's what they call it.
Well, there was a joke about this guy who hears from a stockbroker, hey, buy XYZ company, it's $1 and it's supposed to go up. And he
Mhm.
buys it $1, goes, 2 days later he calls him back, he says, hey, it's at $1.40. He goes, I think you should load up and buy another, couple thousand shares.
Right.
And he does it, and it keeps going up, finally it's $5, $6, and he calls him, he says, it's $10. He goes, I think you should buy another 10,000 shares. He goes, no, sell everything.
Mhm.
Sell? To who?
Oh,
Scary.
that's
So we're talking
very scary.
about schemes and scams to watch out for. And Russell, you had brought some show notes for us, and you listed actually quite 4 or 5 different scams out there. What are the other ones that?
Well, I think probably the most famous scam is the Ponzi scam, named after Mr. Charles Ponzi, who back in the 1920s pulled off a pretty amazing feat. He made almost $10 million using
Back
this
in the
scam.
20s?
Yes.
Wow.
And
It's like
just
a bunch of money.
yeah, and basically a Ponzi scheme is pretty easy to figure out. It's a pyramid scheme, and this is where money from new investors is used to provide a return to previous investors.
And usually they're promising like extraordinary returns, aren't they?
8 to 1 in a week, or
Well,
That's
like
correct.
15, 20%. I mean, some.
Oh no, a lot more than that. It's usually eight times. Like you put in 1,000, they promise you $8,000.
I'm just
That's right.
amazed that it
Yeah.
still goes on today. I mean, here in the Bay Area, that just about once a month, there's another article about someone who got arrested or busted or
Yeah.
accused of running a Ponzi
Well,
scheme.
back in the 70s, I think it was the 70s, there was the Church of Hakeem.
Mhm.
And my dad actually went to one of there were 500 people in there. And the guy had all these Rolls Royces and all that, and people would keep coming up with envelopes, and they'd walk away with envelopes, and that was the whole thing. And I think they promised every 8 weeks you get 16 times on your money or something like that. Everyone
Wow.
claims on how great it is. Well, yeah, it's just new money coming in for the old money. And what I love is when I had a secretary one time who's not the brightest knife in the drawer, as they say. And she showed me, oh, Edward, I have the greatest investment in the world. She shows me this thing, and I go, this is illegal. And
Right.
she shows me this piece of paper, and on the piece of paper it says, this is not illegal. And she says, see, here's proof. This is not illegal. But it seems like every 5 to 10 years, another major one comes out. Yeah, they're always
Right.
around, but
Like
they
a
always
Friends Network or something where you
Yeah.
put in, $50 or $100 or $500, and you tell your friends, and they put in, it's
Yeah.
just basically a big pyramid.
Well, I love when when it goes on television, and then they interview some of these people, like, I don't understand why it's illegal, nobody ever gets hurt. And it's
Except
like,
for the last investors.
And those are the biggest ones. And so what I tried to explain to my secretary, I said, you know what? Listen, and I had to finally explain to her, listen, I'm just kidding, because she was gonna do this. I said, why don't you start your own? Forget putting money in to give to somebody else.
Mhm.
If you're gonna do it, you start it yourself. Be the top dog and say, okay, everyone give me money, blah, blah. And I said, no, don't do that, I'm just kidding, because it's illegal. But I said, why would you follow someone else?
Sure. Well, legal disclaimer, this is Russell Rother. I do not recommend starting your own
Yeah.
pyramid scheme.
See, people didn't understand that in the audience, that Edward Brown was also saying that. But
Yes, he's
yeah,
When it
I'm
comes to
also saying that.
Ponzi schemes, guys, what are some of the things you I mean, how do you look out for those things? Are there obvious earmarks for
If there's
something?
no product, that's one thing.
Often that's the case.
Yeah,
There's no product.
There's gotta be something to sell. That's why, like, a lot of people will hit hard on you know, let's say Amway is an example, because it's multi-level marketing. But that's not a Ponzi scheme, because they're actually providing product.
True, true.
You're actually buying something.
Well, you know, I can come up with an interesting Ponzi scheme that could get past you if you didn't really pay attention. So, for instance, there are a lot of guys out there right now raising money for real estate, and they basically are telling their investors, hey, we're going to use your money to either maybe fix and flip or buy and hold. Now,
That's happening a lot right now. There's a lot of people out there trying to raise money for funds.
that's correct. That's correct. And you know, unless you know that your money is in a certain house by getting a note and deed of trust or something along those lines, or actually being on title, that individual, if he's unscrupulous, could basically take the money and spend it on a Rolls Royce or buy property and not tell you about it.
Well, there was a gentleman who will go unnamed in the in 19, you know, gosh, I'm trying to remember now, the early 90s or late 80s, if I'm not mistaken,
Mhm.
who owned a mortgage company,
Mhm.
and he, if I'm not mistaken, I know he got busted, but if I'm not mistaken, I think he had a 15th mortgage on his house, theoretically.
Wow.
Yeah.
Wow, that's amazing.
I figured past 12 mortgages, you know, okay, something's wrong.
Sure, sure. But I just to finish up the thought on the Ponzi scheme, you know, basically the scheme collapses when the money that is owed to previous investors is greater than the money that's coming in. It's as simple as
Exactly.
that. And you know, our modern Ponzi scheme guy is Bernie Madoff, and
Yeah.
we all know who that is.
Yeah.
Right.
Very good. Hey
Mhm.
guys, we're going to cut to a quick commercial break here. We're gonna have another special trivia. Excuse me,
Oh, the
another special
contest we
contest.
have.
I know this is great.
Listen
Well,
and win.
Listen, well, yeah, well, we're getting a lot of great advertisers to come, and this time it's going to be for Hornblower tickets. Now, imagine yourself aboard a luxury yacht with your closest friends and family. Indulge in deliciously prepared food and scenic San Francisco Bay views. The Hornblower Cruises and Events offer 3 types of dining cruises: a free-flowing champagne brunch cruise, fun and lively supper club cruise, and an elegant 4-course dinner cruise. Fun for all ages. Book now at hornblower.com. And I don't know if you guys have ever been. I've been on there many times, and it's still one of my
I
favorites.
met my
Oh,
wife
yeah.
on a hornblower cruise 20 years ago.
How romantic.
Yeah, I was gonna say, wait a minute. Who'd you go with?
A
Yeah.
friend.
I know one of the most beautiful
Okay.
women in the world who works at Hornblower right now.
Really?
Yeah.
Oh, okay. We're gonna hold that thought.
Okay.
We are going to cut to our second commercial break, and again, we're talking old TV shows. This is a fun show. I like this one. Okay, I mean, our show is fun.
It's
But
always
the trivia
fun.
contest, it's always fun, but this is good to talking about all the scams and all that. Okay, in the TV show I Love Lucy, now going back a number of years.
Lucy.
Lucy, yeah, that's right. What was Lucy's maiden name on the show? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In I Love Lucy, what was Lucy's maiden name? And Russell, I see the eyes turning. I think you know this one, but
I
try to
watch
figure it
too
out.
much TV.
Too much TV, exactly. Call 888-912-1190. Make sure to include your name, your email address, and remember, please speak slowly and spell out your email address for us 1 letter at a time. And we will be right back. Amazing.
Was there a question for the hornblower tickets? Did I get you messed up on that? Did you not ask?
No, that's gonna be next week.
Oh, next
Oh,
week.
okay.
I did say next week. We're gonna-
Yeah. No, Margaret works for them.
Margaret?
Yeah. Marguerite, my girlfriend.
Oh.
I was gonna say, I had a feeling
yeah.
if you were gonna say the most beautiful.
Marguerite.
So I just gave her a big
Oh,
compliment.
did she work
Yeah.
there?
Yes.
Oh, interesting.
Yeah.
Hmm.
It's interesting that they're sponsoring
One of her
this.
clients, right? Or is it, that's the company she works for?
She works for Hornblower.
Okay, I was
Yeah.
confused. as
Yeah,
to-
she basically, you know, manages all of their human resources.
Yeah.
Oh.
But what was I going to say?
was
Oh yeah,
about to
so
say-
Lucy's last name.
Yes.
Do you know it? Do you know it?
I'm gonna remember.
No,
Is it-
because I've
was it
watched a lot of I Love Lucy.
McGillicuddy?
It was McGillicuddy.
Oh my God.
Very good. Yeah, for a guy who didn't start watching TV till he was 8 years old, that's pretty good. No, he did. He didn't watch till he was 8 years old.
That's right.
Wow.
Yeah, I had a lot of catching up to do.
Yeah. I mean, I remember, boy, and then now it's summertime. When I was a kid, I just loved to just wake up and watch all the game shows. And I was like, you ever do that?
Mhm.
hmm
Price is Right and Sail to the Center. I mean, kind of going back, way back in time.
Yeah, but now with a TiVo or, you know, you're one of those things. I mean, you can fly through 5-6 shows in an hour and a half.
Oh, yeah, for all the commercials you
Uh-huh.
not listen to.
All right, let's keep jamming.
Okay,
'cause
so you got a
I
couple.
got a short day.
Okay. So finish up on this, and then we'll go into email time.
Okay. So we got to go pretty quickly over the next two, then I guess.
Yeah.
All right.
Okay, so do that, do that, do that. Are you red eye? Do you have red eyes?
I am red-eyed.
Okay. We always have fun.
Well, if we, you want to do email time still and then do more of this, because what about the fourth segment then? What do you want to talk about? 'Cause
Okay.
we've got enough, we can still continue on, we've got,
You-
the
you wanna go-
variable
you wanna
annuities
go-
one we can talk about.
You can talk about that.
For a
You
while.
want to go to the email time right away?
It'll break it up.
Yeah.
Yeah,
break the
okay,
show
sure,
up.
let's do,
Okay.
yeah, and then we'll do the other stuff in the fourth.
Yeah, that's good. Okay. There we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf and Russell Rosner. And we cut to the second commercial break, and we asked this trivia question. In the TV show I Love Lucy, what was Lucy's maiden name?
That would be McGillicuddy.
That would be McGillicuddy. You are 2 for 2, my friend.
Woo!
Awesome.
Okay, we're going to shoot right on over to email time, and then when we come back, or after email time, we'll get into some more of the fun scams that Russell came up with here, which he didn't invent.
Well, they're not
did you?
fun for the people.
They're
that-
not
No, that's true, they're not.
Fun scams.
Okay, I'm sorry, I shouldn't have said fun scams. They're
We're having fun talking about scams.
That's what we're having
Yes.
fun doing that. Okay. Mark, we received an email from a listener who says, even though interest rates have dropped considerably, I've heard you mention on the show that you still pay your investors a high return. How do you do that? That's a great question.
It is a great question. So yeah, if you listening to the commercials during the commercial break, and which I hope you are, talk about how the investors for Pacific Private Money are earning 8% or more on their savings, and they're doing that by investing in an area that we call trust deed investing. It's also known as basically lending against real estate, where you are the bank. You are providing the funds for a note or a loan secured by a deed of trust on Bay Area real estate. So my company, Pacific Private Money, we specialize in originating loans mostly to real estate investors. We're filling a niche that the banks have largely walked away from in this market. Banks aren't making loans generally today to real estate investors, yet there's a strong demand by real estate investors for capital, for loans to help them buy fix and flip property, or maybe to buy rental property to hold long term, or even if they want to pull cash out of property they own because maybe they want to invest in a business, or sometimes even for consumer purposes. But those loans are generally turned down by the banks, and so private lenders, also known as hard money lenders, have really filled that gap in the last several years by providing loans to real estate investors. And the interesting thing about private lending or hard money lending is that the interest rates that we charge on the loans we originate haven't fallen that much. They've generally, they have fallen, they have come down a bit, but certainly not like bank rates, which went from 7 and 6% down to 3% now for a home loan, or 3.5% if you qualify. Hard money loan rates have generally been between 10 and 12%. That's a pretty common fee, yield to charge a borrower, and oftentimes they're okay with paying that because it's a short-term use of money. So for example, someone who's looking to buy fix and flip property in the Bay Area would generally be willing to pay 12%, 11% for the short-term use of funds that allow them to leverage their equity into a property and make a profit.
But Mark, why wouldn't they just go to a bank?
Well, that's just at the bank, because the banks are saying no. The banks are, even if they have, even if you have good credit, and
Banks are evil.
and even in liquidity and a track record, the banks generally just aren't making those loans, number one. And even if they are, here's the problem: is the banks are taking longer now to do loans, 30 to 45 days.
Oh,
is-
yeah.
Right.
FIREA and all
Right,
the other
and the
regulations,
competition
yeah.
for buying distressed property is pretty high right now, and
That's
so
huge, sure.
and so we get a lot of loan applications that they say, hey, I got to close by next Friday, literally like 5 business days to put that loan together, and we do that on a regular basis.
Well,
So
let me interrupt you for a second.
Yeah.
How does an investor come to you where he said, not investor, I'm sorry, a borrower come to you and says, I need the money by next Friday? What kind of circumstance would make it be that quick a turnaround?
Well, sometimes it's, I'm not the first call they made, and so they,
Maybe
what
they went
happens
down
a
the
lot,
bank
well, what happens a
route.
lot in the Bay Area, quite frankly, is they call a Southern California lender who's promising a lower rate for hard money, and that generally doesn't work. It generally falls through. It's, you know, I swear to God, guys, you have no business calling a Southern California hard money lender in the Bay Area when there's so many good local Bay Area hard money lenders who can, you know, fill your order quickly for cash. But kind of going back to the question of, you know, how can I promise, you know, an 8% or better return to my investors? And quite frankly, it's because I can generally get 9, 10, 11, sometimes 12% note rate from a real estate investor who needs that money quickly. So,
and he's not going to hold it for long term.
And he's
So
not gonna hold it
so
for
if
long.
he pays an extra
Yeah.
3-4%, if he doesn't hold it for that long, it doesn't cost him that much, but he's pretty much locked in to get that money.
So there's not a high correlation between bank rates and private money, hard money rates, really?
no, there really isn't. There's a larger spread today than I've ever seen. So, but again, which is really good news for the investor. Now,
Yeah.
let's say you're an investor and you're listening to this and you're going, "Wow, this is really interesting. How do I get in on this? How do I get more information?" Well, of course, you can go to my website, pacificprivatemoney.com, pacificprivatemoney.com, and get more information, or call me at 415-883-2150, and or go to our website, you know, bestofinvesting.com. My information is there as well. But it is a fairly fast-paced investment opportunity. So for a lot of people who are new at this, sometimes you have to kind of watch from the sidelines and maybe get on our distribution list and look at investment opportunities. And what I mean by fast-paced is, if someone comes to me and needs a loan funded in 5 days, you know, my investors don't have a lot of time to think about it. So
But by the time you talk to the investors, do you have a full package?
Yes, I do. So
Okay.
I collect a full package, and then I introduce that package via an executive summary to my investors. And I do have quite a few investors who've been playing this game for a long time. They understand trustee investing, and they're able to make a quick decision and pull the trigger. So if you're new at this, the thing to do is to really kind of study this, get familiar with it, get on the distribution list, look at opportunities, and you're going to miss them. I mean, that's just what happens. People call me all the time, "Hey, is that opportunity still available?" They'll call 2 or 3 days after I've sent out the email, and the answer is generally no, because
Someone else jumped on
most
it.
of these
Yeah.
loans that we're doing, which, you know, and again, I try to fund quality loans, not, you know, we turned out a lot of loans, in other words. So if I've greenlit that loan, generally, I feel that that's a quality borrower, quality property, quality opportunity, and
Well, see, unlike, you know, the other.
fabulous opportunity for a good return.
Well, but here's the funny thing too, is that, you know, we were talking about the, you know, quote, scams and all this other kind of stuff.
Right.
But the kind of stuff you're doing, people are getting a recorded deed of trust.
Right,
So-
that's
and
the
they- and if it's in the
difference.
Bay Area, they can kick the bricks, they can see what they're
Well,
getting.
and their
so-
name is on the
That's
loan.
right.
Their
Yeah.
name's on the note, their name's on the deed of trust, their name's on the title insurance, their name's on the hazard insurance. So there are safety and security features of trust deed investing that aren't available if you invest in a fund or a pool or any of these other scams that we've been talking about this hour.
Or the stock market.
Or
I mean,
yeah.
essentially, you know, you're really investing in an unsecured investment
Yeah.
when you invest in the stock market. For
Yeah.
instance, when Enron went up, you know, upside
Oh, yeah.
down, it's not like you could have driven out to, what was it, Texas?
Yeah.
Is that where they were?
Yeah.
And grabbed a few computers and paid
Bricks
yourself
out of
back,
the
you
building.
know?
I'm sure the lenders had priority on that. and-
That's right.
and UCC1 lenders, and yeah.
Exactly.
Exactly. I mean, if you're a bondholder, you know, you still have to stand in line.
That's right.
And your bond price goes up and down, whereas the deed of trust, it just stays, the principal just stays whatever it is.
Yeah, and there really aren't, if you think about it, a lot of easy to get into secured investments besides trust deeds.
That's a good point.
It is.
That's a very good point.
Yep.
Well, we received another email, and Russell, this one seems like it's right up your alley. You must have been listening to you a couple of weeks ago on the show, because you were a guest then.
Mhm.
What's the difference between investing in a fund versus an individual deed of trust?
Yeah, that's a great question. I actually have quite a bit of experience in this because back in the mid-2000s, I was co-managing 2 pretty large mortgage pool funds, both almost in excess of $50 million apiece.
Wow.
So to juxtapose the two, it's really more about the style of the investor and what they want. So let me give you an idea what I'm talking about. If you invest in an individual trust deed, you are probably going to be able to go over to that specific house, you know, kick the tires, knock on the door. You're going to learn about the borrower. You're going to know exactly where your money is. And for some investors, that is a requirement. And as opposed to a fund, where a fund is basically a pool of capital that's spread over many properties. And that comes to one specific advantage of a fund, which is that you're diversified. So if your money might be in 150, 200 houses, and so if one borrower doesn't make their payment, you're still probably going to get your return.
But the disadvantage that I can see is that if I'm the investor, I don't get to choose which specific houses or.
You're exactly right.
Yeah.
And so that's what I said initially. It's really up to the investor. So if the investor wants to know where their money is and is willing to accept that risk, that if that borrower decides not to pay and they're not going to get their check next month, then that might be the way to go. Another thing to mention is that you know, with a fund, you don't really know where the money's going until after the fact, after you look at quarterly reports. And you know, a fund that has a lot of capital under management often has a liquidity problem. Not the type of liquidity problem you might be thinking of. It's not that they don't have enough money, they often have too much money. And when they have too much money, they either have to lower their yield because not 100% of their money is placed in loans.
It's in money market funds.
Right, like money market making 1%, or they actually have to go after loans that we may not want to do as a trusted investment company.
And also getting out. Some of them do have a provision where you can get out of the fund. That may be a penalty, maybe not. Versus an individual trustee has a specific date, which is like with Mark, it's usually 1 to 3 years.
Right.
Yeah.
Right.
So, you know, again, pros and cons on all that. But when we first asked you this question, you didn't tell us what you do for a living and what your company is.
Oh, well, you know, we basically provide funds for real estate investors as well, and we also accept investments from investors out there. So very similar company to Mark's company, except that we actually use, besides our own investors, we do use outside groups as well, like hedge funds, insurance companies, and the like. So we're able to do larger loans and also in a larger geographic area.
Okay.
So for instance, we can do loans in Arizona, Oregon, Washington, Nevada, those, you know, various places like that.
All right, and how do people get a hold of you?
Oh, well, you can go to our website, that's equitycoalition.com, or you can look up my profile on LinkedIn. I'm Russell Rosner, that's R-O-E-S-N-E-R, or you can just give me a call, 415-680-3454.
Excellent. And we're going to cut to our third and final commercial break. And here's the trivia question. Again, the theme is old TV shows. Remember the TV show Welcome Back, Kotter?
Absolutely.
Remember Mr.
Barbarino.
Kotter? Yeah, that's going to be the question. Okay. Who played Vinnie Barbarino? And remember, he used to go, Barbarino. Remember that? And Horshack used to, you know, with the Horshack, he used to go, Mr. Kotter. Okay. The first 3 callers with the correct answer are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Their website, lighthouse4fun.com. Check them out. Call 888-912-1190 to answer this question. In Welcome Back, Kotter, who played Vinnie Barbarino? Call 888-912-1190. And make sure to include your name, email address, and remember to speak slowly and spell out your email address 1 letter at a time. And we will be right back. I know you guys.
That's
didn't
too
answer that. That was
easy.
too easy.
I almost blew that one because when you started talking about Welcome Back, Kotter, I was going to say, yeah, the one that launched John Travolta's career. Yeah.
There you go. Yeah. Exactly.
Now we can talk about it. Oh, it's that guy who they're questioning his sexual preferences on People Magazine.
What?
I saw,
John Travolta?
Yeah. Oh, yeah.
And then they, of course, they
Everybody's
show a
convinced
picture of
he's
him
gay
like,
now.
like
He's
when
more bisexual. He's basically.
No way.
Is that what
So
they
many
just-
people have been coming out of the woodwork that it's pretty much a foregone conclusion that he's
Maybe
totally bi.
maybe it's Vogue to do that now.
Yeah, I mean, he's been accused of
Who cares,
recently
you know?
by many male masseuses, and now some guys have come out from 20 years ago and are saying that they were his secret lover. You know, So it's like
How much
people's
money they
all over
want.
it. Yeah, right, exactly.
You know, the thing is that, okay,
I
somebody
mean, it could be total
from
BS.
20
but-
years ago, I mean, somebody is going to blackmail him before
Yeah.
now.
Right,
You know,
think-
you
right.
would
It's
think.
only now that it's
Well-
coming out, and then all of a sudden,
And-
someone got a hold of this guy, and
And someday someone's going to come out and say Ellen DeGeneres is really
Straight.
Ooh, that's big news today. I mean, why did they make that such big news?
You know, I find it really interesting that there's a ride in Disneyland, or sorry, in Epcot in Florida, where you learn about the history of agriculture and stuff, and Ellen DeGeneres is the host. I mean, you would think.
Oh, because Disney being very conservative.
Yeah, it was pretty surprising.
Well, they do have like Gay Day at Disneyland.
Oh, do they? I didn't know that.
I'm happy. I'm gay.
Happy
Can I-
Day,
Okay, so
It might be
last.
worthwhile just to go back and just maybe finish up that conversation a little bit, because I had a couple things, or
Okay.
something I wanted to talk about.
Then we'll
Kind
get
of
into it.
differentiating a
fund
mortgage
and a-
fund from a
Okay.
pool, and a couple of other points,
I
because
gotta
there's
figure
so
out-
much money looking for yield now, and there's a lot of interest in real estate pools and trust deed investments, and
Mhm.
just talk about.
What's
you
your
know,
question, or what's your?
Well, it's not, my point is that, one of the pros of a mortgage pool is that you can put your money to work right away. And I have a
Right.
lot
Oh,
of
yeah.
investors who call me frustrated that they can't seem to get in on some of the deals that I present to them, particularly if they have a specific appetite for, I want a low LTV Marin or San Francisco. Well, you know, everybody, I've got 200 investors, they all want that.
Yeah.
And so
Right.
the little guy is never gonna get in. So if you've got 50 grand or 100 grand, you really wanna put it to work, a mortgage pool could be really your best choice.
Or a REIT.
You know,
Yeah.
You know.
true. You know, so, anyway, but in terms of the, Bay Area, that's just, there is, there's literally, hundreds of millions of dollars of money out there looking, I mean, investors are starving for yield in
Oh,
this
yeah.
market.
Well, the
Right.
mortgage
We're in a
pool,
zero
a lot of times
interest
are
rate
REITs,
environment.
aren't they? I mean,
No, not always.
No, I mean, it could be, limited partnerships or LLCs, but.
Yeah, they're usually Reg D offerings, to tell you the truth. They're not. They're not.
With a limited.
Yeah,
Yeah, they're
about-
usually Reg D offers,
About
yeah.
85% of REITs are actually like REITs
Oh.
where they buy
Ownership,
property. 15% are mortgage REITs.
Wow. Okay, guys, this was a short segment, 8 minutes on this
Okay,
one.
good, well, we'll go
Okay.
fast, yeah.
All right. And away we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hoff and Russell Rosner. And when we cut to the third commercial break, we asked this trivia question. In the TV show Welcome Back, Kotter, who played Vinnie Barbarino?
John Travolta.
John
I knew
Travolta.
that.
Right, Mark, you got one.
1 for 3.
1 for 3, very good. Okay.
I knew it.
Mark, you wanted to ask Russell.
Well, we were getting into a good topic in the last segment where we were talking about the difference between a mortgage pool or mortgage fund and individual trust deed investing, and that's a very important topic. And there was a couple of things I wanted to mention about that, because here we are in effectively a zero interest rate environment, and particularly here in the Bay Area. I mean, there's literally hundreds of millions of dollars of investor capital. I'm talking about just individual investors, like our listeners out there, who have money, and it might be in the stock market or may even be in the bank or CDs, and they're trying to figure out, how do I boost the yield on my retirement savings? How do I get in on some of these investments where the returns are, an awful lot better than 1%, and maybe
Yeah.
up there upwards of 8, 9, 10%, like we've been talking about. And one of the things that we were talking about, the pros and cons between mortgage funds and trust deed investments, and one of the benefits of mortgage pools are that you could write a check to a mortgage fund and your money's working for you right away. And there are a lot of mortgage funds out there, particularly the newer ones that have been started in the last few years, that are returning some excellent yields. So 8 and 9% returns aren't unusual in a mortgage fund. So if you're an investor out there and maybe you've been trying to get into trust deed investing, and maybe you're on a distribution list like ours at Pacific Private Money, but maybe you only got $50,000 or $100,000, and you're just not, I get calls all the time from people who say, hey, is that investment from last week still available? No, sorry, gosh, I really can't, I'd really love to do this. I recommend to people who are in that situation that can't get in on an individual trustee that they really should seriously look at some of the very good quality companies in the Bay Area who are operating one or more funds and have a very good track record. And I know mortgage pools for some people out there, and there might be someone listening, right now that has money stuck in a non-performing fund from maybe 5 or 10 years ago. So I know there's an awful lot of people who are anti-fund right now for that very reason, that you don't have any control over where that money gets
See,
invested.
to me, that is
Right.
the biggest thing, is that I personally wouldn't invest in a pool.
For that reason.
For that reason.
Because you have to
Because
trust the
that's
manager.
right.
The fund
You have
manager is
no idea what they're
100%
doing with
Yeah,
the
well,
money.
almost every single mortgage pool in California went belly up back in 2007, 2008.
Wow.
So, but Mark has a point that the market has stabilized, and it is a good time to be in real estate right now, because we don't really think the market's going to drop a whole lot more. And one other thing to say about investing in a mortgage pool is that your money is continuously vested
Right,
as
that's
well.
the thing. It's
Yeah.
continuously
You're not
working
getting
for
your
you.
money back. But some people like that. Some people like to get their money back and then make a decision about what they want to do next. One recommendation I'd like to make, though, is that if you're considering a mortgage pool, you need to look at the withdrawal
Exactly.
rulings, because I know of one company in the Bay Area, I'll leave it unmentioned. They have a 10-year prepayment penalty, a
Wow.
severe prepayment penalty, where you will lose something along the lines of 10% of your investment if you pull your money out
Sort of
early.
like a long-term annuity insurance company, they do that.
And compare that to
Exactly.
another company that I know that's run by a friend of mine, and he's got 3 funds, and he has a 1 year. So after 1 year, you can pull your money out. So I know
Well,
there's
but
1,
the
3,
question is,
5,
if he's
7
got
years.
enough cash on hand to do that.
Right.
It's subject to how much cash.
Right,
they
so
have on hand.
you do need to investigate that. What are the rules for the fund, and how does that work?
Going back, we have just a quick minute here. Russell, you were talking about some of these kind of interesting scams that were out there.
Right.
What are a couple of you had this one called Prime Bank. Mark and I had never heard of that one.
Yeah.
Oh, well, a Prime Bank scam is it's actually all over LinkedIn. If you are on LinkedIn, you'll get solicited for something like this, where this usually preys upon people that aren't necessarily looking to invest, but to raise money. And how it works is that if you're looking to raise some capital, somebody will say, hey, you know what? The prime banks are able to, like the big banks, are able to make a whole lot more money than you would think. And they can make 30-40% sometimes a year, sometimes people will say even a month. And it's a special trade platform that only I have available. And if you invest $20,000 or $100,000,
In our company, Dewey, Cheatham and Howe. Yes, go
right,
ahead.
right. You'll start making let's just say something between $40,000 and $400,000 a year, and this preys upon people who are really desperate for capital. So if you ever get approached from anyone telling you that they can get 30, 40, 100% returns on your money, run away, because if it sounds too good to be true, it probably is. But I want to talk about the last scam, which is probably the most common, is something called an advance fee fraud.
Okay.
And most people get caught up in this at least once in their lives. So this usually preys upon people that are trying to raise capital or trying to get a loan, a real estate loan. And it's as simple as this. If you want to try to raise some money, somebody will say, okay, we'll go ahead and loan you some money, but you need to pay $10,000 for underwriting, or $5,000 for us to look at this, or to fly out and see your property, or whatever the case may be. So I'm telling all the listeners right now, if somebody wants money up front, just to consider giving you money as a loan, do not do it. Do not pay money up front. The only thing you should be paying money up front for would be an appraisal on a property.
All right.
Absolutely.
Okay, and with that, we are going to cut to our thoughts for the day. We have to end the show here. In high school, I thought I was being smart when my teacher asked me to pick a number between 1 and 4, and I picked pi, until the teacher asked us to write the number down and put it in a hat. I'm still writing today. I wonder if I ever actually graduated from high school. And I once failed survival training. I was asked what one thing I would choose to bring if I had to survive in the desert. And I chose a Chevy car door. And when asked why, I said, so I can roll the window down if it gets too hot.
You're still
And
alive?
I'm still alive, yes. Yeah, I guess my 6 years of high school didn't quite pay off. And with those words of wisdom, we are going to invite our listeners to tune in next week to the Best of Investing. You know why? Because we're going to be giving away 9 more free vacations for answering trivia questions.
Awesome.
Thanks
Great.
for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Excellent.
All right.
Excellent.
Want me to
Good show.
do you, Mark, because you said you had to go? So
Yeah, yeah.
I'll just get a salute.
Okay.